Hello and welcome to another edition of In Focus brought to you by the UONGOZI Institute. My name is Gwamaka Kifukwe. Most experts agree that Africa is in dire need of infrastructure. That infrastructure is important not just for economic growth, but for the social and political benefits that come along with it that's often overlooked. With me in studio today to discuss how Africa can plug this infrastructure gap is Dr. Charles Okeahalam of AGH Capital Group, where he's the Managing Director and CEO. Dr. Okeahalam has a long history of advising international financial institutions as well as central banks across the continent on these very issues here in Africa. He also has a background in financial economics and in shipping. So Dr. Okeahalam, what type of infrastructure is important to Africa's development?
All of it, Gwamaka, all of it. But the problem and the issue is that some of it is more difficult to fund than others.
And why is the infrastructure, so important? Like why infrastructure? Why not some of the other areas like services or so forth?
It's the baseline of everything. It's the thing that makes the system function.
And if that infrastructure, as we accept, is so important, like why is it lacking? I mean, why do we have such problems getting the infrastructure that we need?
Because infrastructure is a broad term for a wide range of things, ranging all the way from telecoms to water, roads to railways, ranging from electricity to airports and ports.
But you have very strongly advocated through the African Development Bank that it should be geared towards or restructured towards focusing on particularly transport infrastructure. Why have you felt so strongly in that particular type of infrastructure?
Well, it's for two reasons really, and it was not just transport. It was transport, electricity, and any other form of infrastructure that binds countries together, that will enable African countries that are, some of them are very small, to be able to participate in a more regional basis, on a more regional basis, such that the cost, the unit price of supplying that infrastructure to every part of the continent would drop. If we were able to move from a national way of looking at this to a regional way of looking at it.
I'm assuming that financing, though, then for infrastructure has been a bit of a problem. I mean, why is that the case?
My view is that I think we use the term financing infrastructure in a broad sense, but that in practice there may not be actually anything like financing infrastructure. You see, infrastructure, as I pointed out, is wide. You can finance telecoms perhaps through the private sector, and there's more private attraction to telecoms because there's better credit controls and ways of monitoring your investment and your returns. But when you look at some other types of infrastructure, for example, water and rail, you find that this entails huge capital expenditure. This huge capital expenditure is something which private financiers would have to take a very long-term view of to be able to make the returns. So it's hard to finance that. And it can be financed if there are the incentives given to the private sector. But without the incentives, you then have a situation in which it would need to be funded by the public sector with appropriate incentives given to the private sector to play a role along the value chain of that type of infrastructure, the very heavy capital intensive infrastructure. In fact, all infrastructure tends to be lumpy in its capital structure and very heavy, but some are heavier than others.
Now, you mentioned the private sector, or private capital, anyway, in terms of financing. Has that type of capital traditionally been involved in infrastructure development on the continent?
To some extent, yes. I mean, once again, you go to telecoms, you look at the mobile phone revolution, you look at what has happened in some parts of the continent where the electricity grid hasn't functioned, and then people have put in IPPs, independent power producing systems, where private capital has played a role. So there is a track record of private capital.
And what about in specifically, I'm slightly more interested in the transport element, but things like roads, rails, ports, airports, has private capital traditionally gone into these areas as well?
Not in all of them. There are roads where there has been build, own and operate and transfer schemes for roads, for some roads. Rail is pretty difficult unless it's freight and specific for end point to end point, origin to destination for freight. So for example, I mean, if you look at a mining business and there you have a mine at some point and you want to move the whatever you are bringing out of the ground to a port. So you're incentivized, if you're that mining company, to put a railway from that point to the port. But there isn't much evidence that that there's private capital playing a role in building railways to particularly low-income rural areas. That tends to be government doing that.
You know, what incentives would need to be there for the private sector to look into these kind of areas? I understand some are more difficult than others, but are there ways of creating partnerships where the private sector could get involved?
Yes, there are. I think the biggest incentive to the private sector is, of course, return on capital and profits, which is clear. And then from there, you need a way in which the private sector can put in value-added services, specifically on railways. You might do the structure which we've seen in some European countries, where the government builds the infrastructure, puts down the railway, and then enables the rolling stock to be operated by the private sector. And that supposedly, which would bring out some efficiencies. That would only work, and I use the word supposedly especially because if the private sector that you put in to operate the railways is actually no more efficient than the public sector that previously ran it, then you're not going to get those gains that you anticipate that you might get. That issue of expected and actual returns then come in. So you have to be very careful about the kind of concessioning agreement or the kind of structuring that you put in place when you introduce the private sector into the provision of infrastructure without a clear mandate given and a clear set of regulatory structures to control the operations and to manage the operations effectively.
I'm glad you mentioned some of those issues, but you know, what else needs to be in place really to make infrastructure or investing in infrastructure attractive?
Sure, certainly. I mean, I'm glad that the level of wars and strife, civil or military or otherwise, on the whole, taken on a long-term view, is declining in Africa. Of course, you can't make long-term investment in a place where there is war. That's the first thing. So there needs to be peace. Secondly, there needs to be clarity in the institutional framework. There needs to be a set of governance rules that people are sure of. There needs to be time consistency in democratic processes. People need to be sure that you are not going to have a change of government that changes policy radically, making your investment less valuable if you're a private sector player, for example, than it would have been with some stability. So you need peace, you need stability. This is why in certain parts of the continent, particularly, for example, in Southern Africa, that South Africa continues to play a meaningful role within that region. With stable leadership. It's also important in West Africa that Nigeria continues to play that role with stable and good and sound leadership despite the challenges that it faces itself. And that then spreads out, that multiplier, to the region such that it enables the investment to take place, to mature, and for investor confidence to be stronger.
Can private capital actually plug this gap between, you know, where we are now with the infrastructure and where we want to get to? Can that funding gap or financing gap be plugged by the private sector?
The actual answer to that is money is not a problem. The key problem is whether the environment is conducive to the flow of money. But having said that as well, we'll have to be very realistic. Depending on the estimates that you take, the annual requirement for infrastructure investment on the continent ranges anywhere from $12 billion a year to something like $47 billion a year, up to 2050. So this is not a trivial sum of money. And whether or not the private sector would fill that gap, even if you put all the incentives, is debatable. So it's against that background that I take the view that the governments of the continent need to lead this. They need to be realistic and then say, listen, we feel that it's unlikely, unless we give an arm and a leg to the private sector, which we shan't do, that they will fund a railway that links an urban area to an extremely low-income rural area in which the economics of it do not enable a return. But government can do that because that's what governments are there for. Governments are there as custodians of the people's welfare in the end. So it's for governments to find a framework, and the view that I have, which is one that I've held for a long period of time, is that when you have these cantonments, these, and I regret to call countries cantonments, but some of them are small and are not scalable. Some of the projects that in those countries, therefore, are not scalable. You want to be part of a bigger system. So you want peace and you want stability. You want good leadership. You want sound economic reforms. And then you want to be able to invest in projects that are beyond national boundaries, that can bring welfare gains and improvements to lives of people irrespective of the countries they're from, which means leadership. It means countries coming together and saying, I can understand how, despite the fact that this railway starts in one country and passes through several countries before terminating in your country, it's in our joint interest to have this to go. Let me give you an example in electricity. There's something called the Inca Dam. And I don't have the numbers with me right here, but the Inca Dam, apparently, the generating capacity it has is so large, would be so large, that it could supply electricity to, I believe, the vast majority of the area that is Southern Africa for sure, Central Africa for sure, East Africa, and parts of West Africa.
Just the one dam.
That one dam and one hydroelectric plant. It's possibly, if done properly, one of the biggest dams of its type in the world. So, if you think of that, that is a classic example of a piece of infrastructure located in a country that is really a regional, almost a continental infrastructure. And that infrastructure would do so many things. It would show a commonality in practical terms that says, you know, those located here, it's a good and a service that's owned by all of sub-Saharan Africa, more or less. And you can imagine then that it is something that should evoke cooperation, engender practical thinking of how to get that infrastructure to come alive. And I'm very glad to tell you that I am made to understand that that there are moves afoot now to get that infrastructure to develop.
So how do you balance out, you know, where to start? What are the priority areas? Should they focus, say, on roads versus rail? Should ports be a priority? You know, how does the government balance these out? Should it look regional when, as you said, there are internal issues in terms of getting these feeder and district roads in particular? They struggle with access, they struggle with funding, they struggle with financing. Some of these are never going to be, you know, economically viable.
Once again, you know, I will mention that in some African countries that had difficulties with infrastructure, you can see progress being made by leaders deciding that there's no other way but to solve some of the infrastructure challenges. I'll give you an example. In Nigeria, for example, Nigeria has 170 million people, and it has therefore something like about 18% of the population of Africa in one country. It has about 300 tribes, has a history of strife at times, and has had a bitter civil war. But one of the things that has been realized by the current government and the leadership, and which is why it is extolled in many places, is that it's now working on infrastructure, the supply of infrastructure, and reforming roads, rebuilding roads, trying to reform the railway system, and also trying to manage the politics of this. And that's difficult. And that's where you need a good leader. And you need a leader willing to listen, which fortunately Nigeria has right now. It has a leader who, despite the noises made, and in spite of the noises around him, is able to say, I want us to go from here to here, and listens to everybody, but still says, this is the way that we need to go. So after institutions comes leadership, or with institutions come leadership. And I really think those two things are the major things that will enable countries to get to develop themselves. Without them, what happens is that the cost of capital is high because risk is perceived to be high. Uncertainty is there. So nobody's willing to put down money and say, let me build a road. I have a 20-year concession, because you are not sure if after 5 years the concession laws will be changed. Right? And then if there is poor leadership, there will be civil strife.
In terms of making this happen on the ground, roads, it seems, the impression I'm getting is roads is essentially going to be the staying piece of either multilateral kind of financing or funding options or through the government. Is it worthwhile? Is it a good strategy to then say, okay, let's leave things like ports, let's leave things like airports to some kind of private sector partnership with the government, just to get them in place? And then with rail, it becomes a bit of an issue in terms of how you split it. Is that what you would advise, in your opinion, what African countries should be doing?
The key problem, Gwamaka, happens to be with infrastructure where the financial return is not obvious.
Roads.
Roads. In areas where people cannot pay. And then it's for government to say, we want this to happen. And actually say, okay, look, this part of the country needs this. So there might be a practical thing that says the amount of kilometers that are tarred in some area is many times greater than this. And the number of people that live in this area may not justify this investment, but they are citizens of this country. So they have to have this service. And that's why I get a bit confused when people say infrastructure financing. I say there's railway financing, like you pointed out, there's road financing, there's telecoms financing, right? But financing is private financing. Then there's government funding. So to answer your question, government then has to fund these railways, fund the electricity supply to these areas. Now, that means when I use the term fund it, it means that the way of the return may not be an immediate financial return. So in a cost-benefit assessment, you would ask yourself with a road, for example, if I fund this road, will I get, what kind of financial return will I get? And I juxtapose it against the kind of reduction in social costs, reduction in accidents, for example, that would otherwise have taken place. Take Kenya, for example. There's a road that's now just been funded with the African Development Bank between Nairobi and a place called Thika. And it would be wonderful if a railway could be put to run along that system, so that you could move the freight off that road and onto the rail line. You would find that that road would last longer, the depreciation of the road would be lower, and then the accident rate on the road would also be less. So it's that kind of assessment that government would have to make in investing in some of these areas that are not financial returns, but have some social values within government's matrix.
there is also, the problem of maintenance, as I'm sure you've seen, in your travels across the continent and so forth. What can be done really to solve, the issues and the challenges in terms of maintaining the infrastructure that's already there? Because there's not much point in building, say, a railway line if, it ends at the port and then the port is defunct.
Sure. The maintenance of infrastructure is critical. It's analogous to saying you already have some stock and then you want to add to it. But that stock that you already have could be kept in a good condition and could then give you the kind of returns that enables you to expand. I mean, and it's correct that you think of infrastructure in that way, that you already have some stock, therefore some savings already, and that you have to have a effective management. And sometimes that exists in the public sector. So I'm not ready to always say that immediately you feel that you need to improve the quality of management of your fixed stock, capital stock, that you need to privatize it immediately. Because with the right incentives even given to the public sector and targets given to the public sector, with good leadership, once again, you can get good management of fixed capital stock and infrastructure. So you have to have this maintenance program that enables you to harness what you have already, which would then should really, in reality, enable you to expand your base because you are used to managing the infrastructure. And I think that's where the private sector can play a very meaningful role. It can do two things. It can actually concession, which would be one way, but I pointed out it may not be necessary to do it all the time with the private sector. Or it can signal to government what ways in which the government might be able to manage the infrastructure in a partnership with government.
Okay. And then, I mean, these partnerships now with the private sector. I mean, we've mentioned the risks in terms of, what the private sector would look for, the incentive structures, the regulations, and so forth. What about from the public side? I mean, what are the risks involved for the public sector, for governments, in engaging with, financial capital markets, with individual investors and so forth? What risks do the government need to be aware of?
If I understand you, I don't think that if the government gets its own house in order and does the things that it needs to do, I don't think the government has much to be afraid of the financial market. I think that, for example, countries that don't have ratings would not be unwise, would not be unwise if they sought ways in which to find out what kind of rating they might get before and make the kind of adjustments that they might need to make before actually going public and actually doing the ratings itself. I think that the financial market is an instrument, is an agent, and is there with us. So there's nothing to be afraid of. Botswana, for example, shows this, that if your country is well managed and transparent and respecting human rights and democratic processes, that markets respond and understand. So I don't think that the public sector has much to worry about. The way we need to see our infrastructure stock, right, is that, and our continent, Gwamaka, is to say that our infrastructure stock is a kind of like our capital account. It's where our reserves are. It's a sense of the basics, like I said. It's a platform from which everything comes. And also, if you look at the experience in Europe, you see the Europeans, since the Second World War, have done many things to try to bind themselves together. So despite having two very brutal wars in the 20th century, France and Germany work very closely together and have done everything to go and advance themselves, and as a result Europe has been stable. And they have something now in Europe called the Trans-European Networks, TENS, and that's a program for road and rail throughout Western Europe and extending itself into the former Soviet bloc slowly, so that's a linkage that's taking place as they've migrated east. It means that, for example, you can get on a train in Nord-Pas-de-Calais in Calais at the border with, and you can now do it all the way now, as a matter of fact, from Waterloo and go all the way through North part of Calais. And you can stay on a train and change it to a couple of places, but that train system will take you all the way down to Spain. Okay. And this is the kind of vision and dream one has. One has a dream of a railway line that goes from Douala to Dakar, of a railway line that goes from Dar es Salaam all the way to Cape Town. But even more interestingly, I would like one that extends from Mombasa, that goes through Nairobi, that goes through Kampala, and it goes and it cuts across now to Bangui, you know, and then it cuts up and it joins that one in Douala. And then it makes a tributary and goes through to Gabon, you know, as well. And now we have these east to west movements. And that's what, as I pointed out earlier, it's going to bind the continent and bring us and then get us the movement of people, the movement of goods. The level of inter-African trade is very low. And most of our trade is from Africa to places outside of Africa. What infrastructure that base will do is drag us all together.
And then in closing, I mean, what is the sort of key message you would like to say about, you know, infrastructure in Africa in terms of how do we get to where we want to get to?
I think that the first thing is I think we have to set the debate right. I think we have to talk about separating infrastructure into various categories. Then the second thing we need to do is then say, it's not likely, and be realistic about it, that if we break it down, that the private sector is going to involve itself ordinarily in some of those sectors, particularly water, I pointed out, electricity, electricity grids that extend themselves, not IPPs, but electricity grids that extend themselves to rural areas and low-income areas, and railway systems that do the same. Then when you say, okay, you're honest about breaking the infrastructure down, you're honest about where the private sector might play a role and where it might not play a role, you then say, what do we have to do? Okay, this bit will be done by the private sector in this sort of way. So let's encourage them there. Let's encourage them actually even in areas which we know that they might not want to be involved in. But let's also realize that in the end, we as government, we as the leaders of Africa, we as Africans have to supply this infrastructure to people. We have to do it. And when we then say that, we then say, how in practical terms do we do that? And then we put down long-term plans and try and review these plans every 5 years and put in the leaders, stable leaders, like the types I mentioned, that hear all the issues about why we can't do it, but are determined to keep on pushing with a longer term agenda such that we get to where we need to get to.
Sure. Well, thank you very much for joining us and for all your insights and your examples and your expertise. It's been a pleasure talking to you.
Thank you, Gwamakan. Sure. Thank you, UONGOZI Institute, for inviting me to Dar es Salaam, a place which I remember with fond memories from 35 years ago.
Always welcome.
Asante sana.